What's up, guys? Welcome back to another episode of the BlockHash Podcast. Happy to have you all back here today. We have a wonderful episode with the CEO and founder of Decasonic, Paul Hsu. Decasonic is a Web3 venture fund focused on pre-seed, seed, early stage investments in the Web3 space and this amazing frontier that we all live in and love. So Paul's going to talk about the VC space for Web3 today. He's going to talk about what they're doing with Decasonic, and then, the broader crypto market. So Paul, welcome to the show, man. Excited to have you here. How you doing?
Very well. Thank you for having me. Big fans of your pod and great to be on today.
It's a pleasure to have you, man. Before we dive into Decasonic, would love to share with the audience a bit more about yourself. How did you get into Web3 in this crypto, blockchain, fintech sphere? Like, what's the story?
My rabbit hole began in 2013 with the first Bitcoin purchase, but I would say my story dates even further back. I'm inspired by the sacrifices that my ancestors, my parents made in lighting up my interest in technology and business. My story is a story about how technology and business can change lives. That's been a guiding principle for a lot of my life-changing decisions. Opportunity to join a .com VC in 2000 that trained me in classical disruptive venture capital investing. We had looked at deals across social, mobile, local, search, e-commerce. Saw a lot of the transition from the existing compute paradigms into the internet paradigms. The frenzy and the boom and bust cycles of .com really inspired me to really dig into consumer internet experiences. Was at NeoCarta for a decade, and then went to get my operating experience at the dawn of the semantic web, or Web 2. Joined Zynga as an early employee across a set of business, product, and growth functions. Was fortunate to have seen a few gaming franchises scale to billion-dollar franchises, Farmville, Mafia Wars, Words of Friends, Zynga Poker. Augmenting my investing experience with an operating experience was a privilege in life, seeing how hypergrowth companies scaled from early employees to post-IPO was my Zynga experience. And it was after the Zynga IPO that I bought my first Bitcoin in 2013. A lot of the gaming, digital goods, digital environments carried over to perspectives of cryptocurrency. Bought that first Bitcoin, was managing friends and family money for a good half a decade. Moved to Chicago in 2018 to start Decasonic. Chicago has a lot of the regulatory and trading infrastructure for digital assets. Want to be closer to this ecosystem, learn from how traders viewed liquidity pools, order books, trading for digital assets, and fortunate enough to have raised this current fund in 2021. Decasonic is an early stage Web3 native venture and digital assets fund. We currently manage just under 50 million under management. We prefer to collaborate with founders at the very early stages of their company and protocol design. We love leading investment rounds with $1 to $2.5 million investments. And so excited to share with you more about our story and how we approach venture markets today.
And do you invest, into fintech startups that are this early stage, primarily within the US or globally, or what's your guys' reach?
We are global investors. Like most other venture firms, we take diversification seriously across geographies, across use cases, across regulatory environments. Currently, about 75% of our investments are in the US, but increasingly we are looking at global opportunities.
And then is it like a segment of Web3 and fintech? Like, do you look for DeFi startups? Do you look for remittance startups? Like, is there like a certain focus or is it kind of broad?
Our view of the world is very much use case driven. We see the largest opportunity in blockchain investing as the mainstream adoption of these innovations. Our perspective is that there are financial use cases and then a set of non-financial use cases. So as you mentioned, DeFi, tokenization of financial assets, RWA, stablecoins, currencies, they generally fall in our world within the financial use cases. And then there's a whole set of non-financial use cases that we also focus on: metaverse, gaming, Web3 commerce, artificial intelligence.
Is there any sector in particular that you guys have invested in that you think or that you feel the most optimistic about? Like, I know there's a lot of them under Web3. It's a big umbrella, but is there one in particular?
I'm very fascinated by the intersection of technologies, Web3 and AI, gaming and Web3. Really outcompete legacy incumbents. It's innovating across these two capabilities that could really 10x better status quo. So we're focused on a lot of those intersectional technologies, and we find that those companies that are able to effectively build capabilities across that spectrum generally are outcompeting legacy solutions, but also other upstarts.
What's in your portfolio right now? Is that something public that you guys have up on the website that you can share? I'm just curious, like, what you've invested in.
Yeah, we do. It's on our website, Decasonic.com. We have a set of about 13 companies across gaming, AI, DeFi, metaverse. Mawari is building out a tokenized network for the metaverse or AR. CoinFX is launching international payment systems on blockchain rails. Paragon is shipping a metagame token that unifies a lot of Web3 gaming gameplay. Scenario is building a generative AI game engine for scaling content production. A lot of the commonality of our portfolio centers on durable use cases for both the company and the token.
Do you guys invest and look to be like active, like within these companies and startups? Like, do you want to sit on the board, help them make decisions, guide them, connect them, or do you take passive positions? Or because I know everyone's a little bit different.
Yeah, great question. What's unique about Decasonic, I believe, is my vision that we're enhancement capital. Enhancement capital enables founders to unleash their greatness however they define it. We'll help guide that path towards greatness. Greatness requires teamwork, just like any championship team or athlete in sports. In business, you rely on a support system, including investors, to help unleash that potential. We do a lot of our underwriting on the gap upside, the gap potential of potential technologies or products. We underwrite with a viewpoint of how we might enhance the value creation, the value capture of that potential. And I hope we put our action where our words are and help guide founders towards unleashing greatness. And so a good number of our portfolio, I serve on the board of directors. In some of those situations, as they mature, we'll step off and join advisory boards or be on a as needed basis. Generally speaking, our approach is to be an accelerant to a company's growth.
It's very interesting what the VC landscape actually kind of looks like today. Go back to like maybe 2021 was probably the last time that VC capital was flowing into the Web3 space at such high volumes and so quickly. And, that's kind of died off the last few years for numerous reasons. The market conditions just weren't very good. But you saw in the beginning of 2024, a lot of that capital start to flow back into new startups very quickly. And I'm just curious, from your perspective as a VC, what does this kind of mean, now that VCs are starting to pour this level of, money back into new startups and new companies and taking on these risks? Like, is that appetite grown again?
Absolutely. There's a lot of optimism in Web3 venture capital today. A lot of the conversations we have with co-investors, but also founders, point to the bottoming out of that sentiment probably this time last year in 23. I think that the trough of despair was a year ago. You see this in lagging indicators of VC funds flows, and what we're seeing today, a year later from that trough, is optimism that money is re-entering our system. LP capital is funding venture firms like ourselves and our collaborators. That cascades through our deployment schedule and a belief that liquidity for exits in Web3 exists. A lot of deal activity has stabilized and picked up over the last quarter. Blockchain venture capital is growing faster than other aspects of venture capital, and we couldn't be busier at Decasonic. We see a lot of great situations, a lot of top quality founders building transformative products. The valuations are reasonable, the exit parameters are reasonable, and undoubtedly that shows up in venture capital data. Quarter on quarter, we're still seeing growth, whether you track it across PitchBook, Galaxy, or Root data. You talk to my peers that there's a lot of optimism around financings right now.
Do you think that'll continue going into the second half of this year? Or do you think that that'll slow down at all or kind of temper expectations? Because there's a lot of chaos in the US politically, and no one knows what's happening. And financially, the US is teetering on recession. It's like things are good, but they're not good.
I think we've been around long enough to expect volatility, expect cycles. In a lot of our conversations and a lot of our advice to our founders, we're seeing increased optimism for the back half of this year, primarily driven by three factors. One, regulatory catalysts. Depending on how the election in the U.S. Turns out, there's general direction towards improved clarity in regulation, embrace of digital assets. There's been a lot of innovation in performant blockchains that enable use cases that start to parallel today's internet. So when fees come down, when settlement times speed up, then drives application performance closer to current day internet. And that's a big catalyst. We saw that this past quarter, this past year, and that trajectory is continuing to sustain. And lastly, I think that the onboarding, wallet abstraction, account abstraction, wallet improvements is creating sign-up flows that are far easier for the mainstream audiences to enter into Web3. Those three factors, those three catalysts, we remain bullish around, and it should provide tailwinds to a lot of Web3 founders building in this space.
Another thing I wanted to ask, and I kind of want to take a dive into your mind as someone that's in VC, like what inside the mind of a VC firm, any kind of VC fund, when they're looking at a potential investment to make into a startup company. It doesn't even have to be Web3, but I guess maybe Web3 since this is kind of the topic. But When you're looking at an early stage company or a project, what are things that VCs like yourself look for? Do you look for solid teams? Do you look for revenue generation? Do you look for bright new ideas? Like, is there something in particular that makes a Web3 VC more excited than helps a company stand out?
I've been doing VC since early 2000, and that experience in seeing the dot-com boom and bust, the mobile boom and bust, and now the Web3 cycles is informative to traditional venture underwriting models versus adapting those models to current day disruptions in the internet. Venture is such a business of power laws that a lot of VCs who are successful really focus on what aspects of greatness are in a particular deal. Why is the team's superpowers differentiated to create world-class products? What is it about the market timing that aligns those superpowers to building successful products? And then how big ultimately do those two line up to create a very valuable company or protocol? At Decasonic in particular, we are early stage investors. We will take pre-product, pre-revenue risk, and our underwriting parameters are generally around narrative, product market fit, and execution. The power of founders and founding teams to tell their story, to share their vision, to align their community around a technology adoption is very important. That's very Web3 specific, but it spills over to other disruptive technologies. The ability for protocols to build product market fit, token market fit, we are taking product development risk. And so the ability and the track record to ship use cases that have audience adoption is very important to our assessments. Any leading indicators of traction, community growth, or product growth can help inform underwriting factor number 2. And certainly lastly, with any good idea that there could be 10 to 20 to hundreds of competitors, execution can really sort out those who are building sizzle versus those who are building substance. There's an intensity about executing well. There's an approach of always being on, continuous learning. There's something about delivering on what you share to deliver that's very important. So we look at those 3 underwriting parameters, and even then, in the 3,000 deals, 5,000 deals per year that we look at, we might underwrite and invest in 8 to 10, and so there is a large funnel of evaluation and assessment towards deviations from the mean. How do we consider greatness across those particular 3 areas?
If there's a startup that's out there that's, looking to get discovered and they're trying to find VC funding, what's the best way for them to go about doing that, generally, but also maybe with you guys too? Like, I'm sure that you get inundated with plenty of opportunities. But if you're a startup, what would you recommend to them? Like, if they're early stage, they don't fully know how to go about, attracting that kind of capital, what should they do? Do they send out emails? Do they set up an account somewhere? Do they set up a meeting? Like, what's the best method forward?
A lot of VCs readily accessible on social media. For us in particular, hit us up on LinkedIn. We're most active on that platform. A lot of other VCs also have contact us on their websites. We're no different about that. The inbound deal flow and communication channels are generally open these days for a lot of VCs. At the same time, we have team members. Other venture firms have team members to reach out to the innovators. So that there's also this dance of if you build success, venture markets are so competitive that VCs will recognize that success. They'll reach out to you too. Deals are those that we reach out to because we just see the results in the market.
I noticed on your website you have something called a Web3 Investor Day coming up here relatively soon. Is that something you want to touch on?
Yeah, sure. It's our third annual Web3 Investor Day. We bring together in an invite-only format the asset allocators, family offices, upstream from the venture funds. We also bring together the venture funds, the trading group that raise money from those asset allocators. And to round out the ecosystem, we invite founders and innovators, whether there's small startups or corporates, to engage in a one-day session of conversations about Web3 adoption. This year's theme is transformation to a fresh tomorrow. We're emerging out of this bear market seemingly into a bull market. And so far we've had a lot of response and a lot of interest in not only a great speaker set, but also attendees. Very excited to host this once again. It's been successful in the last 2 years. And, it's these kind of in-person conversations that help drive us forward as an industry.
Stepping back at a 10,000 foot view and looking at, the markets today, across the fintech space, where do you think we're going? Obviously, there's a lot of things that are kind of up in the air still, going into later this year and what next year will look like in the US. But, generally, globally, this is a space that's innovating at a very rapid pace. And that I swear a year ago, there was no real institutional interest in this space. And then here we are a year later, you have regulators starting to back off a little bit. You have billions and billions of dollars of inflows into different capital instruments and ETFs and everything from hedge funds and asset managers and banks now wanting a piece of this space, all before retail even gets in. And this is a space traditionally driven by retail. It's a very different world that's innovating super fast and growing super fast. What do you think it's going to look like going into next year, going into the next couple of years? It's a very exciting time to be a part of.
Brandon, you nailed it on the head. I think innovation is unabating. It's accelerating, if anything else. And with that innovation, it's attracting institutional capital. You have BlackRock and other traditional finance firms speaking the benefits of tokenizing, financial assets, physical assets. In our world, with my background coming from internet and gaming and social, I think about the tokenization of digital consumer experiences and various aspects that will unleash into society. There's so much about tokenizing with digital assets that can improve society. It can equalize wealth creation opportunities. It's an instrument of freedom, and it's a peer-to-peer technology that enables fewer middlemen in that financial transaction. And those three powerful capabilities of Web3 tokens is increasingly impacting mainstream use cases. I think there's a lot of optimism around venture investors around those capabilities, and you are seeing smart capital get early into funding these technologies and furthering this innovation. It's a great time to be in the space as an investor or an innovator.
Paul, this has been an amazing conversation. I usually talk to the other side of the spectrum with startups and founders and CEOs and executive suite individuals. So it's always good to talk to someone in the VC side of things too, to understand kind of the other side of the table here and how the space works and kind of get your viewpoint on everything. So thank you so much for sharing that today, as well as what you guys are doing with Decasonic and, what's unique and special about what you guys are doing. And, I think overall the direction of this space and, the importance of VC funding in it and capital. And I think how that's, igniting it once again. So thank you for touching on all these things today. I think it's fantastic.
Thank you for having me.
Where can people go if they want to get in touch with you and Decasonic? Where would you direct them?
Best place is our website, Decasonic.com. We're also very active on LinkedIn, Paul Hsu at LinkedIn.
Awesome. Paul, thank you once again. Let's do this again soon. This was great.
Thank you, Brandon.